Hey, good evening. My name is John Collins, and welcome to my Thursday webinars. Thursdays I reserve for credit building, and tonight is more of my comprehensive webinar, How to Increase Your Credit Scores 60 Points in 60 Days, where we take a deep dive into the mortgage world and what they look for from a credit standpoint and the different tools and things that we have to manipulate credit scores to get a quick spike for you so we can get you qualified for a lot of the programs that I help connect people with in my Wednesday webinar. So if you have not had the opportunity to attend my Wednesday webinars, I tend to cover the top 10 programs that are available in our marketplace. Our marketplace is Southeastern Michigan is where I am located. Although a lot of the programs that I do cover they're basically national programs. So I would say out of the 11 programs that we went over last night, I think 9 of them are actually available countrywide. So there are quite a few programs out there, either on the national level, state level, county level, and an endless amount of programs available on the municipal level. So many different programs out there to help people purchase with very little money out of pocket. So my goal is to always connect people with programs that would allow them to get in with no money down. And then a lot of them will actually pay your closing costs. And if not, we can wrestle with that. So most of the people that I work with can get in with just a few $1,000s out of pocket. So for those of you that don't know who I am, my name is John Collins. I work with National Realty Centers. I obviously specialize in connecting people with different down payment assistance programs and grants that are currently available. So feel free to reach out to me. In the description, you'll see my contact information where you can book a call with me. You'll also see links where you can register for my Wednesday webinars that are live and obviously Thursday webinars. So Wednesday, go over programs. Thursdays, we go over credit. So the credit component is somewhat new for me, although I've been doing this before I got back into real estate 7 years ago. I spent well over 20 years in the mortgage business, so I'm very familiar with what it takes from a credit standpoint and how to help people get a quick bounce in their scores. So with that being said, let's dive right into tonight's topic, credit scores, how to get your scores up 60 points in 60 days. So who is this designed for? So let me share these screens with you and see here the one, and let's get this one too. All right, sorry, we've got multiple platforms going here between Facebook, YouTube, and Zoom. So there we go. Okay, we're up on all. So all right, so who is tonight designed for? It is designed for people who have credit scores in that 500 to 600 range. Not that we can't help you and get your scores up if you're in the low 600s, but tonight our focus is to get people from the 500s up to the 600s. Okay, I find that if we can get your credit scores in the mid 600s or high 600s, you're not typically overpaying for credit. So that's my goal. It's also very helpful for people that have no credit scores. We do have options available if you have no credit scores showing up on your credit report. So reach out to me. We can actually discuss that. That's more of a intricate conversation, although we are going to touch on that this evening on how you can generate credit scores in a relatively short period of time. We're also going to touch on how to treat recent bankruptcies, repossession, collections, and this is just for anybody that wants to understand the mortgage credit hurdles and how to get past them to get approved for some of these down payment assistance programs and grants. Okay, do this. Well, the rental market is something that I'm always in tune with. The rental market, in my opinion, across the country has just been turned upside down after COVID. We've seen rents increase at, I think, 28% over the past 24 months. And they are predicting rents to increase at 8.5% per year for the next 5 years. So what does that mean on a national average? We are probably going to be looking at two-bedroom apartments exceeding $1,700 a month in 5 years. So by jumping into these programs, right now we can get that payment locked in for you because every one of the programs that I work with are fixed rate loans where you can have some predictability as far as where your payments are going to be for the foreseeable future. Okay, it's also, there is a lot of misinformation out there. There are a lot of things that common sense would tell you to do one thing with regards to maybe taking care of some old credit issues, but that can actually hurt your credit scores in the short run. So we're going to touch on that, the best do's and don'ts with regards to taking care of old issues on your credit. And a lot of people are overpaying, in my opinion, for actual credit repair. There's no shortage of credit repair companies, and as the economy deteriorates, we're going to see those companies enter the conversation more and more. And I'm starting to see some of the uh, debt relief services surfacing too, and I'll give you my opinion on them. So unfortunately, I'm not a big fan of some of the debt relief services, but just the same, I'll go over why shortly. Uh, Now, the next thing, what our goals are for this evening. Obviously, in the title, we're going to get your credit scores up 60 points in 60 days. Okay. I've got two tools available through a local credit union that can do it just by themselves, but we're going to give you access to some other information that can hopefully take care of some of the baggage, if you have any on your credit report too, that can get your scores up even higher. We're finding that some of the algorithms that generate the credit scores for the credit industry are actually have some they actually have some flexibility with regards to paying down debts right now. We're having people with paying down debts that are getting just huge bounces in their score right now. So I don't know whether that's because the algorithms are adjusting to real time type of responses, but and I'll go over that in depth in a few minutes. But anyways, we're finding we're getting quick bounces in scores by just paying credit cards debts down right now. So our goal is to identify different areas on your credit where you can get a quick bounce in your credit score. So in addition to that, we want to help you add new credit if you have a thin credit profile or don't have a lot of credit. So we've got some tools that are available to help you get a quick bounce in your score by adding new credit. And we also want to set some reasonable, predictable goals, and more importantly, a successful timeline to get your credit where it needs to be in order to qualify for some of these grants and programs that I help connect people with. So anyways, with that being said, let's jump right into it. I find sometimes it's best to start off going over the actual mortgage industry, uh, where they get their scores from, how things are calculated, what goes into the scores themselves. From there, we'll go over some of the steps and how I analyze a report and look for some of that low-hanging fruit to get a quick bounce in your score. From there, I'm going to go over some of the credit building tools out there, and then we'll wrap it up with some of the links and things that we can point you in certain directions to help you out. So, okay. So first, let's jump into the actual mortgage credit industry. Okay. There's actually three credit bureaus. There's actually more than three right now. There's actually four, but there's only three that's being used in the mortgage world. Now, those three are TransUnion, Equifax, and Experian. Now, typically credit scores can range anywhere between 300 to 850. Ideally, once we get your credit score above 600, we're in striking distance for at least a half a dozen programs that are available out there. So what they look for is they are going to look for your middle credit score. Okay, so they're going to pull all three credit bureaus, get credit scores for all three credit bureaus, and whatever your middle score is, that's the score they're going to use to base everything off of. Okay, there are some other programs that are surfacing now where they'll allow us to blend scores and do certain things, but these programs, grants, and down payment assistance programs do not allow for any of that. So it's the old way where they just look at the middle score. Now, they are using the FICO scoring model, 2, 3, 4, or 5. That scoring model is different than some of the free models that are out there that you'll get from like Credit Karma, Credit Sesame, places like that. Okay, they use a different algorithm. I'm finding just my own experience that the mortgage scores are coming in about 20 points lower than Credit Karma. And I say Credit Karma because that just seems to be the big one that everyone knows of. Okay, so what do we look for when we see the three credit scores? I said we use the middle credit score. The middle credit score has to be 600 or higher to qualify for a lot of the programs that I work with. Okay, so if none of your scores are at 600 or higher, we want to take the two highest scores and do what we can to push them north above 600. Okay, so if you have three credit scores, a 650, a 600, and a 500, we don't care about the 500. We just focus on that 600. Okay, and it is a hard line. If we come in with your middle credit score at 599, not doing us any good. Okay, so I will tell you the credit industry, when it comes to, I guess, manipulating your credit scores, for lack of better words, every point counts. Okay, so it is a game of inches, to use a football analogy. So one score, like I said, can make the difference. So right now, we want to get your credit scores preferably to the mid 600s. That opens up a lot of opportunities for us, but we only need it above 600 to qualify for actually my favorite program. It's through a regional lender that I work with, so which would allow somebody to buy with no money down right now. So anyways, we want to get you above 600. Now, most creditors, when I say creditor, I'm talking about a credit card company, auto company, student loans, things like that. Most of them only report to two of the three credit bureaus. Now, some creditors report to all three, and that's wonderful. But when we look at your credit, we want to see what creditors you have and what reports they are reporting to. Okay. Then we want to isolate certain things and look for opportunities to get that middle score up and the highest score up if needed to get a quick spike to get you above that 600 mark. Now, what factors go into a credit score? Payment history obviously is a big thing. So 35% of into your credit score. Okay, so keep that in mind. So no late payments within the last 12 months. If you do have any late payments, I've actually had some people recently have some success calling creditors. Okay, I had someone last week had two 30-day lates with Toyota. They actually called Toyota and Toyota removed them. They sent a letter saying, hey, we are in the process of removing the late payments from your credit report. We were able to take that letter, give it to the mortgage lender, and they were able to get it deleted off their report. So we don't have to wait for it to play out from Toyota's side. We're able to get a credit supplement and get it removed off the report, and we're able to get them done. Okay, so as much as you might think it might be wasteful calling some of those creditors, if you've had a good history with them and for the most part just an isolated late payment, a lot of them are forgiving on that side. So 35% goes into payment history. 30% of what goes into determining your credit score is based on the balance of your credit in relationship to what the limit is. Okay, so they call it credit utilization. So if you owe $300 on a credit card that has a $300 limit, you're not going to get a lot of love there. But if we pay that $300 balance down below 30% or below $90, you're probably going to see a good 20, possibly 30-point lift. Now, I've had some people recently, this is where we're getting the big benefits. Right now, if you pay that $300 balance on a $300 credit card, if you paid that down to just $10, okay, getting that utilization way down, we're getting a huge lift from that. Okay, I had someone just pay down one $300 card and a $500 card, paid them both down to $10. Their score shot up 100 points. Okay, I've had that happen for 3 people over the past 3 weeks. Now, I'm in a small world. I can't say with a high degree of certainty that that's the way things are going. But what I can tell you is the algorithms that generate credit scores are getting very smart. Okay, and with the credit card default rates climbing and auto loan default rates climbing to levels that were back in 2008, I can only imagine that the algorithms are getting so smart that if you're able to pay your bills down during an environment where a lot of people are falling behind, you're getting a bigger bounce. Because 6 months ago, I would have told you to pay that credit card down from $300 to $10 would have only given you a 30-point bounce. Now I'm seeing anywhere between 40 to 50 by paying a card down that much. Okay, so credit utilization is a big factor right now. Okay. Oh, the other thing, please, I'm going to say this several times tonight, please do not pay your collection accounts off unless they are very, very recent. Old collection accounts, and I'll go over this in a little bit more detail in a minute, but I just want to beat this home. Collection accounts, if they're older, do not help you paying them off for the short term. Okay. All right. The next thing I want to focus on is length of credit history. If you have some accounts that have been out there a long time, but you don't use them, please do not close them. Okay. If you have a thin credit profile, and that's just a credit profile that you just don't have a lot of trade lines or a lot of credit. Okay. So if you only have 3 lines of credit and you close one of them, you could watch your credit scores tumble. Okay. So once we know what your scores are, please do not close any accounts. The other thing is, please do not pay off any loans. Okay. Sometimes people think, wow, my car only has 2 or 3 payments on it. I'll just pay that off and my scores will shoot up. No, you're going to lose. That trade line is going to get paid off, closed out, and your scores could go down. It could do the opposite of what you think. Okay. So once we know what your scores are, we don't want to jeopardize playing with a lot of the things that are on there that we don't know what the outcome is going to be. Okay. But what we can do is add things to it and manipulate things to get them where we need them to be. Okay. So that's what goes into a credit score. So those are the 3 things I typically focus on: payment history, credit utilization, length of credit history, and you do get a bounce for types of credit used. So if you have auto loans, student loans, couple credit cards, things like that, there's some credit diversity where you'll get a lift from that. So, could be a point or 2. And like I said earlier, every point counts. Okay. Whoops. Sorry to bounce around here. Okay. Now I want to handle these are some of the big questions that ultimately come up. Okay. Number 1, student loans. Unfortunately, the amount of student loan debt out there right now is absolutely crazy. Whoops. Let me admit all. I am terribly sorry. Got it. So I'm sorry I didn't see a couple people sitting in the waiting room. So okay, got it. So my apologies, Pamela, Tamiko, didn't see you sitting in there in the waiting room. So we were just going over a few different things with regards to what goes into credit scores, how they're generated. Right now, I'm going over the 4 big things that really drag credit down for some people and how to handle those. So you didn't miss a lot coming in, just what goes into generating a credit score. I'm actually going to recap a lot of that stuff in just a few minutes. So if you have any questions, please do not hesitate to reach out. Okay, raise your hand. I'll be happy to unmute you and we can take it from there. So, all right. And sorry, I just want to get my chat room opened up here. Okay. Got it. So one thing I do want to do before I jump into this next slide, I'm going to put my contact information. This is where you can book a call with me. Okay, so you'll see no down payment required /book. You can click that link and book a call with me. Okay, let me put that in here. Sorry, I've got a couple of platforms I need to enter this on. Okay, got it. So let's pick up where, okay, so student loans. How do we look at student loans? Now, student loans 2 years ago in the mortgage world was a really tough conversation. Things have improved dramatically, okay? Right now, we're seeing a lot of student loans that were in forbearance for COVID that are starting to come out, Okay. So if you're in school, the loans are typically in deferment. Okay. The mortgage world does not like uncertainty. Okay. And having a loan in deferment is uncertainty. So what they would like is you're going to have to pull those loans out of deferment, get some repayment plans, and then get your mortgage and, or get qualified for one of the down payment assistance programs or grants and close on a house. Then you can put it back in deferment. Okay. So unfortunately, you do have to go through the exercise of pulling it out. And the reason is they want a payment calculated. Okay. You can do an income-based repayment plan. Okay. A couple of years ago, that wasn't an option. That's becoming a lot easier. And an income-based repayment plan, it just is just like what it sounds. It's a payment based on what your income is. Okay. So just to kind of give you an example, a couple of years ago, if you had someone that had $100,000 in student loans, 2 years ago, they were going to take 1% of that, which was $1,000, and they were going to count that against your income on a monthly basis. So they were hitting people with $1,000 a month in payments. Okay. Now with income-based repayment plans, they've changed it a little bit. Now they'll take those income-based. So I had somebody a few months ago that $100,000 in student loans, they received an income-based repayment plan of $30 a month. We were able to use just $30 a month and use that in their debt to income ratios to get them approved for a loan, even though $30 a month doesn't even scratch the surface on the interest on $100,000, let alone, I mean, $100,000 at 3% interest is $3,000 a year. That's $250 a month. And they were factoring in $30 a month. So $250 a month on that size loan doesn't even cover the interest. Okay. So anyways, you get where I'm going with that. Now, forbearance, you cannot have a loan in forbearance. We got to pull it out, do some type of repayment on that. If your payments are in default, that's actually, I get excited when I see that people unfortunately have let their student loans go in default. Default is actually a very easy fix right now. Okay. What they're doing for defaulted student loans they are allowing you to call and reactivate your loans. And as long as you make those payments on time for 3 months, they're going to flip your loan from being in default to paid as agreed and sell you off to a servicing company. So I'll have people that'll call me or I'll talk to them, they'll counsel them, and they're at a 550 credit score. And they're like, yeah, my student loans were in default. I'm like, that's great. That's an easy fix. Call them today. They will give you payments that are so low because their goal is to get you performing. Once they get you out of default and performing, they can sell your loan off to a servicing company. Okay. Unfortunately, they will not let you pay the 3 months up front. You have to make 3 months payments before they will flip the switch over from showing bad to good. Okay. But the payments will be very affordable. I mean, $30 a month is probably what I hear most of the time. Okay. But once after that third month, they'll flip the switch and you are in good shape with student loans. Okay. So if you have any questions about student loans, please toss them in the chat room. Next topic I want to touch on are repossessions. So repossession, running into a fair amount of people that co-sign loans for friends, family members, whatever. We all try to help family when we can. If you are settled with a repossession, the first thing to do is to call me so we know, number one, I need to know who the creditor is. Some creditors, and I need to know what the amount is. And the reason is some creditors are a little bit more diligent with regards to collection practices than others. Okay. So I just had someone last month that had a repossession on their credit for $6,000 and we were still able to get them approved. Okay. Now, I don't know, I can't say with any degree of certainty that that's going to become commonplace, but just the same, that's the first time that ever happened. Okay. Typically, what happens is if the balance is low enough and you can pay it off, great. If not, sometimes I get it. Sometimes you might people buy cars and they're lemons. Okay. They might go to one of the B lots buy a car, drive off the lot, and then 2 hours or a couple of days later, there's a major defect with the car and they're not taking it back. The last thing you want to do is pay for something you were not able to use. I totally understand that. So my goal is to coach you to get you approved for these programs, into a house, and across the finish line. So what I would typically coach people to do is, hey, as painful as it is at the very last minute, right before we apply for these programs, you probably want to start some payment arrangements with that repossession company. Okay. $100 a month for a couple of months. As long as we do that before you apply for these grants or down payment assistance programs, you'll get approved. And the reason is you've actually were proactive and did it before you applied for the loan. Okay. Now, once you get approved, buy the house and get in, what you do with the payments, that's up to you. Okay. No judgment there. So there are a couple of different ways to handle repossessions. So I'd like to know the whole situation before I point you in the right direction there, or at least give you the options that are available. Now, bankruptcy. There are two types of bankruptcy, Chapter 7, Chapter 13. Chapter 7 is when you wipe the slate clean. For that, we cannot do anything till 2 years after the discharge date, okay? It is very important that you build credit. Now, once that Chapter 7 happens, you're going to get a clean slate. And when you start building credit with some of the tools that we're going to talk about in a few minutes, your credit scores will shoot up to 700 in about 6 months to a year, okay? It's important that you keep those trade lines up to date and make those payments on time. If you have any late payments after a bankruptcy, you're going to get spanked harder than if you didn't have the bankruptcy, okay? Because those algorithms know that you got to pass, okay? So try to keep up to date on those. The other type of bankruptcy is a Chapter 13. And what that is, it's basically reorganization. You take all your debts, they put them all together and negotiate a balance, and then you make payments to a trustee. Now, for that type of bankruptcy, you can actually get a mortgage 12 months after you start the Chapter 13. You have to have 12 months payments to the trustee on time, and then we can get something done. Okay? So don't let anybody tell you if you're in a Chapter 13, you can get financing. Okay? I've only had one trustee fight us on that in the 30 some years. Okay. And actually we did end up winning that because I think the attorney threatened to take the trustee in front of the judge and they caved. Okay. And the reason is it makes sense. I mean, with rents going out of control, this gentleman was actually saving $500 a month by buying a house versus what he was paying in rent in the area that he was living. Okay. So there are a lot of ways to get that done. Now, the most important trips people account. With auction accounts, please do not pay them. Leave them alone. We will try to negotiate that balance later. Okay. The damage on a collection that's over 2 years old is done. Okay. If you pay that off now, it's going to show paid. Right now we're in May 2023. It's going to reactivate that collection. It's going to show paid now. Your scores will go down because you've reactivated that collection. Okay, so please don't do that. That's the one thing that trips people up quite a bit. Now, your scores will go back up and go a little bit higher, but it takes 90 plus days for that to happen. Okay, if your collections are less than 2 years old, we want to look at those on a case-by-case basis. So 1 to 2 years old, we want to look at those and possibly run them through a simulator just to get a feel for what's going to happen once they're paid off. Okay. Sometimes we just want to leave them. Okay. I will tell you right now, medical collections, just leave them. Okay. There have been a couple of algorithms that have basically stated that they're not factoring medical collections into your credit scores any longer. Fannie Mae actually had an announcement last week where they're removing medical collections from the algorithm. Okay, so I would say if there's medical collection out there, please just leave it alone. Okay, we'll deal with it if we have to. More often than not, it's probably not going to be an issue. All right. So if you do have collection accounts that are less than 1 year old, again, that's case by case. If it's less than 6 months old, we might want to look at paying those. Okay. Recent collections. So if you have a fresh collection that hits your account and you pay it off, your score will go up. Okay. But if it's older than a few months, it gets a little dicey as far as what's going to happen. Definitely, if it's over 6 months old, we want to run it through a simulator. Okay. So that's how we handle collections. All right. The next thing I want to go over are my steps for analyzing credit and what we do in different situations. Okay, so the steps that I typically do is first thing we want to do is we want to get a copy of your credit report. Okay, so we can go out to annualcreditreport.com. Okay, there you will get your credit reports. You actually have to pay for your credit scores. Okay, so it's nice to have your credit scores. Okay, that's it, it's not the same unless you use the FICO models. Okay, 2, 3, 4, and 5. Once we know where those scores are, we need to determine if we need to work on 1 or 2 scores. Okay, again, remember we want those credit scores above 600. So if everything's below 600, then we want to take the 2 highest ones and we want to work on those. Okay, if there's 1 score above 600, 1 below, or middle one's below, then we just want to work on that 1 score. Okay, we want to look at those credit reports and we want to analyze if they're what we can do to get a quick bounce in your score. Okay. Now, how do we do that? We look at what's driving those scores down. Is it late payments? Is it collections? Is it credit utilization? Okay. For me, ideally, if there's open trade lines or open credit cards, I'm always looking at the credit utilization right now. Okay. So if we can drop that credit utilization below 30%, we're going to see a pretty big spike in your score. Okay. So the scenario I used earlier, if you have a credit score, a credit limit of 300 and you owe 300, pay that down to below 30%, you're probably going to get a 20-point bounce. If you take that down to about $10 or so, you're going to get maybe a 25-point bounce, possibly even 30 or 40-point bounce. Okay. I did share with you that I had someone that had a 50-point bounce. I can't say that that's going to be routine right now, but it's kind of trending in that direction. Okay. Late payments, try to call those creditors. Okay. Collection accounts, we'll deal with those on a case-by-case basis. You do need to have at least 2 to 3 trade lines, I should say, in order to get financing. Okay. And a trade line is just a line of credit. Okay. It could be a credit card, auto loan, student loan, personal line of credit, things like that. Okay. So we're going to look at your credit to see what we can do to manipulate the items that you have on there right now. Okay. Now, if that doesn't get us where we need to be with a margin of error, so for example, if I need someone wants to get them up to 600, I'm pushing to get you up to a 620 or a 630. Okay. I don't want to go through, 2 things just to try to get you up to a 605 or a 610. That's just not enough margin of error for me. I like to get it higher. Okay. So instead of working on 2 things, we might do 3 things. We might ask you to add credit. Okay. Adding a secured credit cards are a good idea. Secured loans are a great idea. I'm finding right now secured credit cards can give you a good 20-point bounce in 45 to 60 days. Secured loans can give you a good 30 to 50-point bounce over 60 to 90 days. Okay. And if you have the ability or have any friends or family members that would be so kind to put you on as an authorized user on one of their credit cards, that's another great maneuver. Okay. The credit industry tried to put a damper on this about 10 years ago, but I find that it's still a technique that works quite well. Okay. What we want to do, though, is anytime we're adding these new credits or authorized users, we want to go for companies that are reporting to all 3 credit bureaus, if at all possible. Okay. And if you are looking to become an authorized user on someone's account, you want to make sure that they haven't had any recent late payments, that the credit card isn't maxed out, that they've got a lot of room on their credit. So, for example, I had a lady a couple of months ago, young lady, was able to ask her grandmother to be put on her credit card. She had a Sears card that was opened up in 1976, had a $20,000 limit, and she only owed a few $100s. So this young lady went from a 550 credit score to a 650 credit score in 1 month just by being added as an authorized user on that credit card. Didn't even know Sears credit cards were still out there, but I guess if you pay them, they're out there. Okay, so those are the steps that I use to get a quick bounce in your score. I could tell you there's no question by using these, get 60 points in 60 days. And I'm going to go over some of those tools for those steps in just a moment. Okay, the do's, the things that I look for. Okay, so we need to subscribe to a free credit monitoring service. I personally like Credit Hero. The reason I like Credit Hero is they give you a free credit report for all 3 credit bureaus, give you free credit scores. Okay, they charge $1 to do it. Okay, and if you don't cancel it within 7 days, they're going to bill you $19.95 a month. But it's $1 right out of the gate. Okay, to get and it's a really good format where you can read it and understand what it means. Okay. But if you want to go with the free sites, Credit Karma is good, Credit Sesame is good. Okay, so if you have credit cards, okay, we want to reduce those balances below 30%. Okay, one other tool, and I don't really harp on this, is you can ask the creditors to increase your credit limit. Okay, that's one way to get your utilization down. Not too many credit cards are increasing limits right now. I haven't had anybody have a successful conversation with that in several months. And that's just a byproduct, in my opinion, that the default rates are increasing so much. So they are not. So if you call your credit card company and ask them for an increase and they say no, don't take it personally. I don't know anybody that's getting an increase right now. But you can pay down your balances below 30%. Please do not pay them off. I find the algorithms give you a slightly higher score if you leave $10 on a card versus paying it off to zero. Okay. Next thing, obviously, get added as an authorized user if it's possible. Set up a secured card or a secured loan as soon as possible. And I'm going to go over a couple of places that I like or a couple of tools I like at a local credit union in just a minute. If you don't have any credit scores or you have a thin credit profile, let's just say maybe you have an auto loan and that's it. Okay. We can add things to your credit report. They call it alternative lines of credit or alternative trade lines. Okay. Now, how do we do that? We get copies of your bank statements showing that things are paid or automatically deducted. We can add your rent, your cell phone bills, car insurance, subscriptions, all kinds of things. Anything you're paying on a monthly basis, and we can prove that you paid them for 12 months, we can have them added to your credit report. So here's a good example. I had a gentleman a couple of months ago. He really had a very thin credit profile. He had a credit card that he just recently got, and it was, so he had a credit score low 600s, but he didn't have 12-month history, which is what they look for. But he was a big gamer, I guess. So he had Sony, Xbox, you name it, all kinds of gaming subscriptions. So we were able to get his bank statements showing all of these gaming subscriptions were paid every month for the past 12 months. We were able to give those to the lender. They were able to add those trade lines to his credit report, and he was able to get approved for a loan. Okay. So the other thing that we want to do is we want to make arrangements with collection accounts over $2,000 once you've got your pre-approval. Okay, it's a tough one. So sometimes so if it's a collection account over $2,000, a lot of the lenders will ask that they be paid off. Okay, so sometimes it's better to just get an arrangement of $100 a month, and they'll factor that in your debt to income ratios. Okay, the things that you don't want to do. Okay, do not apply for new credit unless we know you're going to get it. Okay, so don't apply for credit cards. You might apply for a secured card because we know you'll get that. You might do a secured loan because we know you're going to get that. The problem is if you apply for 2 or 3 credit cards and no new credit is issued, the algorithms are going to sense that in 30 to 60 days. You had some inquiries, no new credit issued. maybe those creditors know more than the algorithms do, and you're not going to get a very favorable outcome from a inquiry standpoint. Okay. And where if a new card gets opened up, sometimes it can give you a lift. So we don't want to take those chances. We want to work with very predictable results. Okay. Like I said earlier, don't blindly pay off the collections. If it's over 2 years, leave it alone. Less than 2 years, case by case. Don't do anything with your medical. 1 to 2 years, we'll run through a simulator. 0 to 1 years, we'll address those collections on a case by case basis. Please do not pay your credit card balances off. Just pay them down to $10 if you can. Don't pay off loans. Okay. And don't become an authorized user on a new account or an account with late payments. And most importantly, do not employ debt consolidation services. Okay. Debt consolidation companies are looked at the same way as doing a bankruptcy. Okay. So as soon as somebody pulls your credit and sees debt consolidation services, you're denied. Nobody will touch you for anything because it's always looked like you just couldn't manage it. Even though you think you're doing the right thing, it looks like you're in bankruptcy in their eyes. Okay. So those are the don'ts. Now, let's get the tools that are. Number one, a secured credit card. What is a secured credit card? You give a creditor a balance. You give them a deposit, $300, $500. They're going to give you a credit card with a $300 or $500 limit. Okay. So they have them for Visa cards. They have them for MasterCards. It's important once you receive the card to use it. It forces them to set it up and report that information to the credit bureaus. Okay. Try not to charge more than 30% of the credit limit. Okay. So keep that balance below 30%. Pay down immediately once you get your bill, but don't pay it off. Okay. By setting up a secured card, you're going to see your credit scores are going to pop by about 20 to 30 points in 30 to 60 days. Okay. So that's one tool for a bounce. Secured loan. Okay. This is by far and away my favorite. And it's actually available through a local credit union called Michigan First Credit Union. They have what's called a secured loan. There's a couple of other credit unions that offer it too, but I just like this one because I just know how predictable it is. Okay. By the way, Michigan First Credit Union offers secured credit cards too. So I will tell you, it's just nice dealing with someone in your own backyard. They're headquartered in Southfield and they've got branches all over the Detroit area. Okay. I will tell you from a customer service standpoint, if you go in, I think they do a fantastic job. Unfortunately, if you ever need to get anybody on the phone, it's kind of a pain in the butt. So, but they do a good job with helping people build their credit. Now, what is a secured loan? Okay, secured loan. You actually give Michigan First $525. They charge $25 to actually set this up. Okay. But what they do is they take the remaining balance, the $500, and they put it in the savings account so you can't touch it. Okay, it's locked down. That's the security for the loan they're going to give you. Then they're going to put $500 in your checking account. Okay, so it's going to look like you have $1,000, 500 in your savings account and 500 in your checking. But please keep in mind, you're not going to be able to pull that 500 in your savings account out until the loan is paid off. Now, this loan is for 6 months. What they will do is they're going to take $80-something a month out of your checking account to pay off this loan. Okay. And at the end of 6 months, once the loan's paid off, they're going to release the money in your savings account. So the big benefit to this program is when they report it to the credit bureaus, they're going to report it to all 3 credit bureaus as a personal line of credit, which is one of the hardest things to get. This will bounce your credit scores 40 to 60 points in 45 to 90 days. I would say in 45 days, you'll probably see a good 30 to 40 point lift. In 90 days, you're probably going to be approaching 60. I have someone that had a 70-point lift a couple of months ago. Okay. So this is a great credit building tool. The other thing is when you think about it, you're going to have you've got a personal line of credit, maybe a secured credit card, auto loan. Who knows? In these student loans, you've got a lot of credit diversity out there too. You're going to get a little bit of a lift in your score for the diversity too. Okay. So Secured loans through Michigan First Credit Union. Authorized users. Okay, we touched on this a little while ago. Authorized users work 90% of the time. This is why I like to go over this. Reason it doesn't work all the time is technically when they add you as an authorized user, they're supposed to have your start date on your credit report, the date that you're added to the card. I found that most of the people who are adding you, they are phone jockeys, they're busy, their calls are all timed. And to do that is a manual entry. So more often than not, they just add you to the card. And when they add you, you get the start date or the open date of when it originally happened or when they originally opened the account. So you're going to get all the benefit of that history. Okay. Doesn't always work that way. Occasionally, I get somebody that does their job the correct way, and you'll still get a lift. It's just not as much of a lift as you would hope for. Okay, but you want to make sure that it's a seasoned old account with a low balance, low utilization, and good payment history. Okay. The next one, alternative trade lines. Okay, these are the things that we can use for alternative trade lines. Basically, what you can do is get statements for any of these accounts showing that you paid them for the past 12 months, or if you're paid through your bank statements and automated payment plans, that's even better. Okay. But we can add rent, auto insurance, P.O. box payments, storage unit payments, cable bills, cell phone bills, renter's insurance, utility bills, monthly subscriptions, Netflix, gaming, gym memberships. Those are all things that can be used to build credit if we have a thin credit profile and need to do it. Okay. So keep in mind, a lot of these programs that I help connect people with, these are designed for first-time home buyers. So they understand that you may have a thin credit profile. Okay. So, and I think it's important that if you need to get connected with someone, a loan officer, let me make that introduction for you. Sometimes loan officers don't like to do the alternative trade lines, okay, and don't suggest them, okay. Keep in mind, this is an expense because the mortgage company has to gather all this information and pay to have your information added to the credit report. So you want to make sure that you're aligning yourself with a lender that's not going to squawk at the expense, because it's not not that it's a huge amount in the big scheme of things, but adding one trade line to 3 bureaus, that could be $90. It's $30 a bureau. Okay. So if you got to get two things added, that could be $180 to get it added to 3 bureaus. Not that you need 3 bureaus. Remember, we're only trying to get that middle score up and maybe the high score up. So maybe we'll need to add it to 2 bureaus. That would be, $30 each, $60. So, but some lenders don't want to incur the work and some don't want to incur the expense. Okay. So you want to make sure that we're working with a lender that's open-minded and willing to do those things. Okay. Credit monitoring services. Okay. I am a big fan of Credit Hero. Okay. I like working with Credit Hero because I can take your information from Credit Hero and do a free credit audit for people. Okay. So what is a credit audit? That is where I can take everything on your credit report and run it through a simulator, and it's going to help me help you with regards to how to best get a quick bounce in your credit score. Okay. So I do those credit audits for free. So typically what will happen is I'll chat with you. We'll have like a 15-minute phone call. I will send you a link where you can join Credit Hero for $1. Okay. Keep in mind, you have to cancel the membership within 7 days or they're going to bill you $19.95 a month, which actually isn't a bad thing. I really like it. Just for the fact that they set alerts and we can constantly analyze your new reports every 30 days to see what's lifted. Okay, so Credit Hero is my favorite. There are other companies out there that are free. Experian.com will give you your Experian score. Credit Karma will give you your TransUnion and Equifax. And Credit Sesame is another one that I think competes with Credit Karma. I like that one because sometimes Credit Karma is a little finicky. If you haven't been on their website for a while, it's hard to get on if you forget your password. Okay. So please keep in mind, I do credit audits for people all the time. Just schedule a call. with me, and I'm happy to go over that with you. All right. Okay. The next thing I want to talk about are restoration services. What are they? Credit restoration services are companies that basically try to tackle and get rid of the negative information on your credit report. Now, I see value in them. I think that it's not the best solution for most people. Most people just kind of run that way thinking that's it. Now, if your credit scores are below 500, credit restoration is probably a good way to go. Okay. But it's one of those things where my experience is after 6 months, you shouldn't be on them any longer than 6 months. Okay. So what are credit restoration services and what are they doing? Okay. This is just my opinion. Okay. Credit services are, as much as they can't actually say this, but they're taking advantage of some loopholes in the Fair Credit Reporting Act. Okay. What are those loopholes? Okay. If there are any incorrect items on your credit report or any negative things showing up on your credit report, they're challenging everything. Okay. They're not typically going to challenge more than 5 things at a time. Okay. So if you have 5 negative things or incorrect items on your credit report, they're going to challenge 5 at a time. Okay. And the reason I don't challenge more than 5 at a time myself, just for the fact that the credit reporting agencies can look at that as a frivolous claim. Okay. So we don't really want to challenge more than 5 items at a time. What do? When we send them letters challenging those 5 items or whatever items there are, they only have 30 days to respond to that letter. Okay, so if I send them a letter saying, hey, these 5 items are incorrect, okay, by the time they receive that letter, they've got 30 days to contact the furnisher or the company that sent them that information to make sure that that information is correct and get back to you within 30 days. So I will tell you that 30% of the time, they can't meet that time. And if they don't meet the time restraints, it has to be deleted. Okay. So 30% of the time, whether it's correct, if it's incorrect, it's got to be removed. But if it is correct and they just don't make the time hurdle, they have to be removed. Okay. So what happens? We challenge 30%. So 1 or 2 items may fall off. Takes about 45 days for that to all play out. By the time mail comes in, even though they have 30, it's about 45. Then in 45 days, we'd send out another round of letters challenging all those 5 things again, 5 new things, maybe 3 of the old things and 2 new things. And again, we may get 1 or 2 items off. So we keep doing that. Typically, depending upon how many items are on there, I find that most people might have 10, 15 items. By the time we send 3 rounds of letters off and build credit at the same time, you're going to be where you need to be to get something done. Okay. What we don't want to do is just continuously pay $100 a month. And in some cases, I had someone a couple of weeks ago that was paying $200 a month to Lexington Law for their premium service, and they really weren't getting anywhere. And there sometimes when you could send a letter out challenging 5 things and nothing may happen. Okay. Again, it's one of those things where it's just persistence. Just keep sending those letters out. But what I run into is if you have negative things, getting negative things off your report, it's only going to lift your credit so high. I find that if you have like a 520 credit score, it might push it up to 580 and it kind of stalls out. You need to add new credit at the same time as you're taking care of that old stuff. Okay. Getting the things removed through credit restoration companies, that's almost a rolling the dice in my mind. Okay. I can tell you adding things to your credit, that's very predictable for me. I can tell you within 5-10 points what's going to happen when you add things and add new trade lines. Okay. So that's why I like to go that route, because for me, it's more predictable. Okay. Sometimes it's a 1-2 punch and you want to do both things. So if we have credit scores in the high 400s or low 500s, yes, it's probably worth going that route. Okay. But I like to sharpshoot. Okay, I'm going to look at your credit report and I'm going to pick those items that I'm very confident probably aren't going to be challenged. Okay, and they'll get them removed. Okay, but I still like to say 30% removal rate is probably what the industry standard is. Okay, so those are credit restoration companies. All right. And services to people, I just don't like with that. Okay. We do it as a, and actually, I do it for free for people. If you just buy, if you're buying a house from us, we'll actually credit you in charges that we have back at closing. And many times, if it's just one round of letters, we don't even charge for that. So my goal isn't to make money off of the credit restoration, it's to get you into a house on some of these programs. That's what my team and I do. Okay. We want to get you approved for the down payment assistance programs and grants that are out there so we can get you out of that renting cycle and into purchasing. Okay. So, where do we go from here? So, for those of you that don't know, like I said earlier, I do a webinar on Wednesdays, the top ways to buy with no money down. Last night, we covered 11 different programs that are currently available in Southeastern Michigan. And there are a lot more than that. There are a lot of municipal programs that I don't really talk about because that money comes and goes very quickly. But if it is available, we're certainly going to jump on it. Okay. Uh, Thursday nights, obviously, like tonight, I always go over credit. So if you have any friends, family, or anybody that needs any help or coaching on the credit side, for whatever reason, I enjoy coaching on that side of it. Okay. So the first step would be to schedule a call with me. Okay. I did put my booking link, no down payment required.org/book. And here is my contact information. You know what? If you have a phone, please take a picture of this. Okay. So you can always reach me at john@owntheroof.com. That's my website that I'm transferring things over to right now. So if you'd like to schedule a call, you can. The links for my webinars are all based around no down payment required.org. If you want to reach me, just /book, and you can schedule a call with me. Happy to go over your situation. On the call, it would really be helpful if you knew what your credit score was and your income was. Uh, so the three things that go into getting approved for some of the programs are credit, income, and assets. Okay. The assets, I always tell people, please don't worry about the money. That's my job. I'll put you in touch with the grants and down payment assistance programs. That's the easy part. Credit can sometimes be a hurdle, and we do need to have the income to support the house payments. There are some programs that I can help you with for low income people as well too. Okay, now the weekly webinars I do Wednesdays, 7 o'clock. The top zero down programs that are available. You can register there at no down payment required.org. Okay, and then Thursdays is when I do my credit building webinars. Okay, I do the long ones like tonight twice a month. Okay, where I go over things in detail. Now, I do record these webinars and I am in the process. It takes a couple of days by the time my teammate edits them and then we upload them to YouTube. I got to start uploading them to Facebook as well too. So anyways, I certainly appreciate you attending this evening. I can give you, let me give you my phone number in the chat box too. It is 248-252-7283. Okay, and let me copy that. And paste that again. And let's put that in here. Control V. Okay. All right. So we got the phone number in there several times. So to just have a couple of people left right now. If anybody has any questions, now might be a good time. Any questions out there, please go ahead and type them in the chat room, or if you'd like to raise your hand, happy to unmute you. Okay. All right. Well, thank you all very much for attending this evening. Certainly appreciate your time. If you ever have any questions with regards to anything in real estate, I have a pretty diverse background, spent over 20 years in the mortgage business, title industry, and in the obviously real estate sales. I've had my license since 1987, so there's very few questions or situations or scenarios that I haven't dealt with in the past. And if I don't know, I've got a pretty good network of people to help answer any questions you might have. So anyways, thank you very much for watching. Hope our paths cross down the road. Have a good evening. Goodbye.